Okay, right. When you see this sort of thing, I suppose you can test it yourself. You can see first of all that we have machine hours increasing as well as overhead. So it means that this cost can't be purely fixed. Right? And it means that to a certain extent it can't be purely variable because you're being asked about fixed overhead. So it must be semi-variable. So you should then really and truly draw yourself a high-low method chart, sort of understand that, okay, listen, we're saying here that when costs go from 17,000 to 18,500, we are saying that overheads increase from 246,500 to 251,750. What is that variable element, right? And that's what we're sort of what happens. How much does the variable cost increase by when we produce an extra unit? That's what we're sort of saying here. So we're saying that we have 251,750 minus 246,500. When we go 18,500 minus 17,000. When we go from 17,000 to 18,500, we go from 246 to 251. This is what the high-low method is fundamentally about. So let's find these differences. So we have 251,750 minus 246,500. So that's 5,250 divided by 18,500 minus 17,000, which is 1,500. And so 5250 minus, divided by 1,500 is 3.5. So we know that the variable cost is 3.5. So I'll give myself some space. So we know the variable cost is £3.50, right? That's what we know. So that's great. So you just go to any of them. Just go to any one of these and plug that figure in, because you know that the total cost is equal to fixed cost plus variable cost. So I'm just going to go here. It doesn't matter which one. So I know the total cost of 251,750 is equal to my fixed cost plus the £2.50 times the number of machine hours, which was 18,500. And if you do that, sorry, not £2.50, £3.50, that's how we would have got ourselves into a twist. So £3.50 times 18,500 is 64,750. So 251,750 is equal to fixed cost plus 64,750, making your fixed costs 750, 187,000. Right? So this is a straight application of the high-low method. Question 44. What you want to be doing here is you want to just literally just test them to see yourself for variability. So if they were purely variable, if they were fixed, we would see them being the same. They're not. There's nothing here that's the same. None of this over 125 units and 180 units. None of these costs don't remain the same. So we know they're not fixed. So they could either be variable, which means that per unit they'd be the same, right? So what you want to do is look at T1. Actually, because I just plugged this into the calculator myself, let's start with T2 to illustrate. If you do 1,750 as a cost, right? This is T2 divided by 125 units, and you do 2,520 divided by 180 units, right? Let's just do that very quickly. You have 1,750 divided by 125. You have 14. This is 14. You do the same thing here. You have 14 as well. So it means that this is a variable cost. This is variable. If you do 3225 divided by 125, you get 25.8. You get 25.8 per unit. You get 25.8 per unit.2 and T4 are purely variable, which leaves you with T1 and T3, because when you do these, you will notice that the cost per unit falls. So the more units you're making, right, like all things, fixed cost will fall with the units you're making. So that will fall And so your answers here are T1 and T3 because these costs are falling as you increase the number of units. Cool. Right, this question is not bad. This is a pretty nice question. This is more about definitions, isn't it? So variable costs, right? If you think about a variable cost, it's like a cost of sale. You're making something. If you think about it, um, I suppose the best answer here really is that as volume increases, it increases as well. So that's really the issue here. Whether proportionally, we would argue, yes, proportionally. So we would argue here the answer would be 7, increases as total volume increases. Now a fixed cost, I suppose, is fixed over the range. That's one way of looking at it. But the more units you make, you can think about it, it will decrease per unit. That's the point, isn't it? So really a fixed cost will start to fall, if you like, because right, if you have £100 as your fixed cost, you make 1 unit is 100 over 1. If you make 2 units, it's 100 over 2, which is 50. If you make 3 units, you see where I'm going with this. So the point here is that option 1 works best. Step costs are fixed costs that are only fixed for a certain volume range, right? By the time you get here, the fixed cost increases again to completely different volume, right? It increases again. So the answer there is 5. And then finally, a semi-variable cost is always made up of fixed and variable costs. So there's a mixture of the two over there. So what are we looking at here? If you're looking at this, there is the fixed element here, and then the rest of it becomes variable, isn't it? So there is a mixture of fixed and variable. So here we have a semi-variable cost here. And what do we have here? We now have a stepped scenario. This is you can see that staring at you right there. So that's a semi-variable cost right there. Okay, why might a company decide to allocate between, imagine you have different products, A, B, C, and you have, well, with allocation, in all honesty, we're talking about costs that are directly connected to these departments. So the salary of supervisors, individual supervisors for A, B, and C. So 3 supervisors. So I suppose in a way you can sort of see here that if I'm making current revenues of, doesn't really matter of what they are, I would want to allocate these costs here to be able to, if you like, assess what these are called segments, aren't they? These are segments or departments. So I can clearly see what's going on. Yeah, there's nothing to do with inventory, nothing to do so much with standards, nothing per se. And speeding up is very unclear, very open expression. So the answer here is C. Cost centers. So we talk here about centers. When we're talking about monitoring revenues, I suppose that would be profit, yes. Profit, monitoring revenues. We're talking about return on capital employed, so we're talking about investment. And here we're talking about maintaining machinery, so this is a cost. It's a cost sort of center manager. We'll be interested in looking at that. Okay, let's jump into this. The best thing to do when you're doing this is to just find the totals, because that's the best. I mean, this one you can see straight away. This is obvious. This is, you can see it's just variable, because if the cost per mile is £7, irrelevant of how many miles, right? It's just a variable cost. So we know that cost 2 is purely variable, right? We know the fixed costs, all of these will fall, as you can see, as you increase. The question is, we just need to understand what's taking place. So let's look at cost 1, right? So we have, the best thing to do is if 14 times 1,500, you have 21,000. I'm just going to write that up here. I'm going to do each of them and then deal with them. Then I'll have 7 times 3 is 21,000 again. Then I have here 6 times 4,500 is 27,000. And then I have here £4.50 times 6,000 is 27,000. So obviously there is a fixed element here, but it's stepped, isn't it? It's stepped. So it's stepped. Now, thankfully they've said 5,000. So 5,000 miles sits in between here, isn't it? It's between here and here. So I know definitely that the total cost, even at 5,000 miles, will still be 27,000. Will still be £27,000. Oops, sorry, I should do that properly. I should do that properly here. It's still £27,000. Yes. Um, cost 2, I know it's variable, so it's just going to be 7 times 5, isn't it? Because it's £7, £7 a mile. So that's 7 times 5,000, which is 35. The total cost is 35,000. 7 times 5, that's 35,000, isn't it? Let's look at cost 3. What is going on here? So again, like I said, I'm just going to clean this out now. I've done cost 1. I know cost 2 was always going to be variable. Let's see what's happening with cost 3. So I go 21 times 1,500. That's 31,500. 31,500. £10.50 times 3,000 is 31,500. 7 times 4,500 is 31,500. And just for the sake of fulfilling all righteousness, let's just find out what the last one is. That's 31,500. So this is a classic fixed cost. Oops, sorry. That's a classic fixed cost. This is fixed, and this is 31,500. So I suspect this will be the semi-variable cost. I can already just assume, because there's no way, they've asked you all the others, but you can see that that's falling. So I know I'm not even going to waste time. I know I'm going to have to find the fixed element. So let's just do that. I'll take the, if you like, the activity, the highest and the lowest activity. Let's find the totals. So we have here 12 times, so let me just clean this, give myself some, and clean this out. Yes, let's just clean this out. So we have 12 times 1,500, which is 18,000 as the total cost. And here we have £7.50 times 6,000, which is 45,000. So what do I know? This is what I know. I know that when I go from 1,500 miles to 6,000 miles, we go from 18,000 to 45,000. Right? So we know this. So therefore, we know that the variable cost must be 45,000 minus 18,000 divided by the change in mileage, which is 6,000 minus 1,500. Yes, that's what we're saying. We're saying that you have a cost of 45,000. We've just found that cost, haven't we, by multiplying the cost per mile times the number of miles. So what we are saying is 45,000 minus 18,000, which is 27,000, divided by 4,500. 6,000 minus 1,500 is 4,500. So 27,000 divided by 4,500 is 6. So we know we're talking about the variable cost here being £6. So we've isolated the £6 notion. So I'll just pick any of them. Pick either this one or this one. It's up to you. Let's pick. Doesn't matter. Again, like I say, you can pick both. Test them yourself. It's important. So let's pick the 1,500 miles. So I know the total here is 18,000. So I'm going to pick the £6 times 1,500 is equal to 6 times 1,500 is equal to 9,000. Is 9,000. So it means that the fixed element must be £9,000, right? Because this is 18,000, wasn't it? 1,500 times 12 was 18,000. Yeah, so 9,000. So when I'm talking about 5,000 miles, for 5,000 miles, I'll first multiply that by 6 to get 30,000. That's the variable element, and then I'll add on the £9,000, and that gives you £39,000. Right? So that's your semi-variable cost. Right, and that is question 49. Let's continue with card cycle. They seem to use card cycle a lot in this whole discussion. So what you have here is says that card cycle has prepared a forecast for the next quarter, and what we have here, this is based on selling and producing 2,160 batches. What's interesting here is that you are told clearly, well, we can see the different activity levels, and that's great. Then we are told that the semi-variable costs, we should work with the semi-variables using the high-low method. So they're telling us what to do here when working with these, and that's great. But with the variables, that's fine as well. We know what's going on. I can tell you here, you have sales revenue here of 64,800, and you have the batches sold here. So you have 64,800 divided by 2,160, and you have £30. So you're selling each for 30. This is variable, so I'm just going to multiply that, aren't I? 30 times 2,700, that's 81,000. 30 times 3,600, and that's 108,000. Right, so those are my revenues. Okay, great. And then I can do the same for variable costs, right? And I can have 9720 divided by 2160, and that's 4.5. That's £4.50 per unit. So, right, based on this, that's at £4.50. That's at £4.50. I can do the same for labor. That's 22680 divided by 2160, and that's £10.50. £10.50. And I can do exactly the same thing here. 12,960 divided by 2160 is £6. That's at £6. So I can find, you know, I can translate these into this. I can do that. Let's do that quickly. Let's do all the direct stuff. So £4.50 times 2,700 gives me 12,150. £4.50 times 3,600, that's 16,200. Here you have £10.50 times 2,700, and that's 28,350. And here you have £10.50 times 3,600, and that's 37,800. And here you have £6 times 2,700, and that's 16,200. Again, you have 6 times 3,600, and that's 21,600. Right, so we've done all of these, aren't we? With the semi-variable, they tell us, listen, if you're going to be playing around with your semi-variables, what you want to be doing is that you have a scenario that looks like this, right? You have a scenario that looks like this. You have it's telling you that you know what's happening when you have 2,160 batches, and we know what's going on when we have 5,400 batches. So we have the costs here, and here are the costs. The semi-variable cost here is 13,284, and the semi-variable cost here is 6,804. So what does that mean? We can tell that we can tell what those movements are, can't we? We can tell that when we have a change in cost of 13,284 minus 6,804, we have a change in cost in terms of variable costs, 5,400 minus 2,160. We need to isolate the variable element first, don't we? By looking at that change in total cost, and looking at that change in total cost. Sorry, the change in the totals of the totals, and then divide that by the change in the units. And when we do that, 13,284 minus 6,804, and that's 6,480. This is the numerator. 6,000 divided by 5,400 minus 2,160, which is 3,240. So 6480 divided by 3240 is £2. So you have £2. So you have £2 charge. It's £2 variable charge, and a £2 variable charge times. Let's work out what the let's pick this one. Let's pick this one, right? So you have a total of 6,804. This is equal to a fixed element plus the £2 times the 2160. So the 2160 times 2 is 4320. 4320, which means that your fixed element, of course, is the difference minus the 6804, which is 2484. So we have a fixed element now very clearly being 2484. This is a fixed cost, and we know that we are talking about £2 in terms of variability. So I just have to be careful when I deal with this here. The variable element, of course, is the, well, I can plug in the fixed element here, 6804, 6804. The variable element is just 2 times the figures. It's 2 times 2,700, and that's 5,400, and then 2 times that again, 2 times 3,600, and that's 7,200. Right, and then just again, let's just plug it all the way down. I'm just going to do this one just because of time. Let's look at the total cost. Must this 12,150 plus 12,150 plus 28,350 plus 16,200 plus 5,400 plus 6,804 is 68,904. And my total profit will be to take this total cost away from this revenue minus 81,000, which is 12,096. Bit interesting. I feel this is a rather interesting. Yes, sorry, yes, of course. No, my profit is less here. I'm just sort of seeing, maybe I've made just trying to make sure I don't have any numerical errors here. 2816. No, it's not 6804, Ian. Sorry, I knew there was something wrong there. That the fixed element isn't 6804. The fixed element is 2484. Forgive me. Yes, 2484 is the fixed element. I don't know why I picked that. 2484. 2484. 2484. So let's just do that again. So these figures will be wrong. Let's just add that through again. So we have 12,150. 12,150 plus 28,350 plus 16,200 plus 5,400 plus 2,484, and that's 64,584. And when you take that away from the 81,000, you have, yeah, that makes a bit more sense. 16,416. My profits just seemed a bit odd. They were less than the original year. So now you can divide that by the total number of batches, which is 2,700, and voila, you should be there. This is £6.08. So just repeat the same thing for the next, for 3,600. And that is question 50. So you can see there were variable elements as well as the semi-variable element, which I suspect must be the same thing here. Yes, there is a so there's a bit of play around with this as well here, and so in effect this is literally the same thing. This repeats itself. 51 repeats itself. It looks exactly like that. And I think what we will do is, because 52 looks a bit different, we will do 52. But 51 literally is, you can see even the layout is literally the same thing. You can use exactly the same principle. Can you see what I mean? You can see here you are. So in your assessment, they will give you, there's some information here telling you about the semi-variable element, but you can find that. Actually, you know what? We might just do 51 as well, but yeah, we'll do 51 as well. We'll do 51 as well. So looking at 51, there's just a bit of play on revenue and a number of things, but you just have to watch the question carefully. You know, it's about adapting, isn't it? So we're told, as far as revenue is concerned, that you have agreed that on all miles in excess of the 5,000, in excess, so more than that, you will charge 10% less. So I suppose the first question here is to ask, well, how much do you currently charge per mile? So if you're making 2.5 million, that's what this is. That's what this is, isn't it? You're currently having revenue of 2.5 million over 5,000 miles. So a mile must therefore be 2.5 million over 5,000, which is £500 per mile. That's what we're talking about, right? We're talking about £500 per mile. That's what we mean. So if we're looking at £500 per mile, well, we're saying up to 5,000 miles, you will end up with 2.5 million. But after that, you're giving a 10% discount. So if you're currently charging £500 per mile with a 10% discount, that's 10% of 500 is 50. So you're taking 50 off, and that's yeah, I was interrupted there. So you have 10%. So that's 500 minus the 50, which is 450 post the 5,000 miles, right? So what we're saying here is that revenue here would be, well, for the first 5,000 miles, just create some space. For the first 5,000 miles, we are looking, for the first 5,000 miles, we're looking at £500. And then for the next 1,000 miles, we're looking at 450. Then we'll do the same thing quickly here for this one, for the 7,000. For the first 5,000 miles, we're looking at 500. And for the next 2,000 miles, we're looking at 450. So let's just do these, and we can plug our figures in there really quickly. So this is 5,000. This is 2.5 plus 450,000, and that's 2,950. And here you have 2.5, and then you have 2,000 times 450, which is 900,000, which is 3.4 million. Suppose we're using the 3 zeros, so that's fine. I can just write 3. Yes, let me just be, yes. Yeah, and that's what you have. We're told that the only thing here, the only variable, we're told that this, it's landing that and service fees that are semi-variable. So aviation fuel must be variable. Aviation fuel must be variable. So in terms of being variable, how do I know what it is? Well, it's 400,000. It's 400,000 divided by 5,000 miles. So 400,000 divided by 5,000 miles is £80 a mile. So for 6,000 miles, we're talking about 480,000. And then for 7,000 miles, we're talking about 560,000. And then we're told, and let's do the other variables because we know this is also purely variable. So I have 135,000 divided by 5,000. 135,000 divided by 5,000. It's 27. So 27, multiply that across by the 6,000. That's 162. Take that same 27, multiply that by the 7,000. That's 189. Then we go to this landing business with 600,000, which is fixed, plus £50 a mile. We've done this. We can test that. Just do exactly the same thing. 50 times 6 is 300. Yes, so this is 600,000 plus £50 times 6,000 for this one. And we're doing the same thing, but this time times 7,000. Yes, 50 times 7,000 miles plus the 600,000, which is fixed. They tell us. So here I have 900,000, and here I have 950,000. That's what's going on here, isn't it? And these are fixed. 420. They tell us they're fixed. They're not changing. 625. 625. And then, yes, as usual, let's add all the cost. I'll just do this one. So I have here, in terms of all my costs, I have 480 plus 900 plus 162 plus 420 plus 625. Yes, and then we have here 25,2,587. And so you have this total cost, and so the total profit will take this away from the revenue of 2,950, and that's 363. And then I'll divide that 363,000, divide that by the number of miles, and you will have here, I have here 60.5. Yes, 60.5, and then just do the same thing down the line. Add all these, get your total cost, take this total cost away from this revenue, and then divide that by the total number of likely miles. And that's question 51. I'm trying to fit all of this into one video before I go into the next topic area. So let's look at 52. I actually think, I think that now a lot of the work we've done applies nicely into this. All of that applies perfectly nicely, but I think we will do it again because it does look slightly different in its layout. Let's just quickly see. Grape is negotiating a new contract with a customer. The owl is produced in batches and is based on selling and producing 800 batches. They might increase, and it appears that activity feasible. Again, they're doing that. Look, they've given you some great information to find this information. You have all your variables. You play around with them. Just, you can find what the unit cost is for the revenue. Unit revenue. You can find for the variables for that, and for the semi-variable, that's the only thing I think I'll do here. Semi-variable, just so you can see. Again, we know that when the units are 800, the semi-variable cost is 2520, and when the costs, they tell us, when the costs are 1,600, the semi-variable cost is 4,920. So I'm literally saying 4,920 minus 2,520 divided by 1,600 minus 800. Right? That's what I'm doing to find what the variable cost is per unit. And when I do this, I now take that and plug that in, right? So let's just quickly do that. 4,920 minus 2,520. Divide that by, that's 2,400, isn't it? Divide that by the 800, and then you have 3 pounds. So now that you have 3 pounds, just pick one of them. Pick one of them. Pick one of them. Pick the 800. Let's pick this one. So the total semi-variable cost is 2,520. If I've picked 800 and I multiply that by 3 to get the variable element, it means the fixed element is the difference, 2,520 minus 2,400. Yes, and then the fixed element is 120. Hopefully my maths has held for me to be able to get this right. I don't think I've made a mistake there. That's quite the case, isn't it? 492. So that's the case. So you now have your fixed element, and you can go ahead and do what you like by simply multiplying the £3 times the new sets of units that you're interested in for variable, um, and you can play around with that. Okay, great stuff. And that brings us to the end of the questions on behavior, semi-variable costs, and things like that. And then we'll move into the next set of videos on segmental reporting.